Hey, what's up guys? Jerwin here with two Asians and a dog, and in today's video, we'll go back to the basics of investing, starting with what is a stock, what's an ETF, and what is a mutual fund. For those looking to invest in the stock market, these three terms you definitely should know and must know. Let's get started. Investopedia defines a stock as a security that represents the ownership of a fraction of a corporation. Also know that security is just another commonly used term for stocks. Companies such as Tesla, let's say, typically issue stocks to raise money for their company. Money used to manage and grow the business, acquire other businesses, and sometimes just to fatten their books. Having a stock in Tesla does not mean you own Tesla. It means you own shares issued by Tesla, which means you can't show up at a Tesla factory and give advice to Elon. Did you know there's actually two types of stocks? There's the common stock, which allows you as a shareholder to receive dividends, if of course the stock pays dividends, and it also gives you a vote during shareholder meetings. These are the stocks commonly purchased by us, the masses, aka retail investors. Then there's the preferred stocks. Preferred stockholders are a priority to the corporations. For example, if the corporation were to file for BK, the preferred stockholders are a priority over us common stockholders. And since they are more important, you would think they actually have voting rights during the meetings. But in general, they actually do not have voting rights whatsoever. But they do receive higher dividend payouts, of course, if the company gives out dividends. Owning a stock, aka security in a company, means you are invested in the good and the bad, the ups and the downs of that company. You need or want that company to do well, because if that company does well, more people would want to invest in that company, which in turn increases the price of your stock value. The example I typically use, as you know, is Tesla. Tesla shares grew a whopping 695% in 2020. If you don't know, the average return in the stock market is 9%. So yeah, Tesla had a pretty good 2020, and everyone that owned Tesla shares went along for that ride. If you guys have anything to share, make sure you comment below. Also, if you wouldn't mind turning that little thumb there blue as well, that would be greatly appreciated. Now let's talk about mutual funds. When I was working at JP Chase, the most simple way to describe a mutual fund is a basket of fruit. A fruit basket with apples, bananas, watermelons, and strawberries. You get the point, right? It's a big basket that's filled with different stocks and bonds. When I think of mutual funds, I automatically think of VTSAX. It's a Vanguard mutual fund, which is also the largest mutual fund in the world. Let me list a few of the companies in VTSAX. Apple, Tesla, JP Chase, Facebook, Berkshire Hathaway. Those are just a few. There's just way too many companies to name, but these guys have the highest percentages in the fund. Why invest in a mutual fund instead of just buying an individual stock, you may ask? Well, let me also ask you this. Why buy just a banana when you can buy a whole basket of fruit? If that banana goes bad, that's all you have. If you have a basket of fruit and one fruit goes bad, you still have the other fruits in the basket. Essentially, the point of buying a mutual fund instead of buying an individual stock is for you to diversify your investment. So VTSAX has the largest companies in the world. Even if one or maybe two of the companies go under, the fund will survive. For example, Apple has the largest holdings in VTSAX, and it's only a little bit over 4.5% of the entire asset of VTSAX. We said this before on our other videos. For newer stock market investors, start with a mutual fund to get your knowledge and to build your risk tolerance. Last but not least, let's talk about ETFs. ETFs are fairly new compared to mutual funds. Earlier, I described a mutual fund as a basket of fruit, which in turn is really a basket of stocks and bonds. ETFs, which by the way stands for Exchange Traded Funds, is somewhat similar. It's a basket of like companies in the same sector. For example, real estate sector, pharmaceutical, or one of our favorites, the airline sector. JETS, J-E-T-S, is one of the ETFs we invested in during COVID times. JETS is an ETF that covers the airline sector. So instead of just buying, say, Delta or Southwest Airlines on its own, we purchased JETS to diversify and to not rely on one airline company. One of the most well-known ETFs is also FANG, F-A-N-G. FANG stands for Facebook, Amazon, Netflix, and Google. I'm pretty confident you have heard of all four of these companies. And again, you are buying a sector, not an individual company. Now, ETFs are more aggressive than mutual funds, but it's also more conservative than individual stocks. Regardless of which level of investing you are in, the whole goal is to start investing. Any of the three options has risks, but the one with the biggest risk is sitting on the sidelines, not investing at all. When people ask us, when is the best time to invest? Our answer is always, yesterday. Alright guys, so thank you very much for watching, and if you feel this video helped in any way, make sure you share with at least one friend and consider subscribing as well. We'll see you in the next one.